Hello there. This is Virtual Nexus and Crypto Dyers. We are here to start part 4 of our blockchain fundamentals course. As always, cryptocurrencies and blockchain investments are extremely speculative and risky. They fall outside of much of current regulatory frameworks and as such are risky for novice, inexperienced, and experienced investors. Because of its novel nature, the cryptocurrency market is fraught with many difficult to evaluate assets, including fraud, scams, and schemes. Do not risk anything you cannot stand to lose. Furthermore, intensive due diligence surrounding complex technical, financial, and regulatory issues is required in this market. This presentation and all associated with Crypto Diaries and Virtual Nexus are for educational purposes only. We never recommend the purchase, sale, nor trading of any specific asset or issue. However, we do offer information to enable our audience to learn how to manage their own risk and potentially capitalize on mispricing in the cryptocurrency and blockchain market. Without further ado, let's go. All right, so yesterday, before we talk about this, we went over Transaction Street. We went over two types of blockchains. We do the traditional blockchain, blockchain 1.0, which I call Bitcoin, also known as Boomer Coin and Grandpa Coin. And yes, I like to dog out on Bitcoin. I started with Bitcoin just like all the rest of us. Okay, my first blockchain node was in 2012, but I couldn't buy anything. And I generally don't do things just for the money. So instead, I spent my money on education. Many of my friends were standing up Bitcoin nodes on little PCs, single PUCs, they call them pucks, little Intel boxes, and they were mining. I know a bunch of them lost money and they lost a lot of coins in Mt. Gox, but they're probably all multi-millionaires now. Who knows? They may even be billionaires. But that's life. I've lost money on Bitcoin. I've sent it to wallets that don't exist. I don't think I've sent it to wallets that don't exist, but wallets that I no longer have access to. It happens. But since then, I've followed, not only have I followed crypto, but I learned how to stand up blockchains and how to write smart contracts, which is what we're going to talk about today. We're going to talk about Ethereum and all layer of basically what I call blockchain 2.0. And there's actually blockchain 3.0. Blockchain 2.0 adds smart contracts. That's Ethereum, which is originally proof of work and switched to proof of work last fall. It took us 7 years to get there, roughly. I remember in 2017, so that's 6 years, we were working on the merge. We started and we continually kind of changed. People would say we shifted the goalpost, but we had to adjust it. And I've been doing tech for a long time. A lot of people in blockchain they're not like, I helped build the internet in the 90s. I set up Microsoft's first extranet and cloud called Microsoft Business Partner Network with a couple of good friends of mine who are now, they're all managers now. Yeah, kind of reminds me of the Army. Guys get out of the trenches and they become generals. But regardless, what are the types of blockchains we have? So we talked about consensus. All right, we had a Byzantine fault tolerance. We talked about essentially proof of work and proof of stake, which I was just talking about. Proof of work solves a mathematical problem, uses copious amounts of energy. Proof of work does. And proof of stake actually uses validators, which are chosen by an algorithm, and you have to stake some tokens. Most of them are moving to proof of stake now because it's much more economical and it can be more egalitarian, meaning that more people can get to stake versus proof of work. Now, some of them, it's actually harder to stake. I think Solana, you need something like 2,000 Solana to stake. I was like, what? And then you get yield. What is yield? You get paid for putting your tokens and running a validator, which has basically electricity costs. It has like technical costs. You have to watch out being DDoSed, a bunch of other stuff, which we'll talk about some other time. So this graphic here is from Infographics. Okay, it talks about up here, you'll see smart contracts, Internet of Things tokens, sharing economy. So you can basically, they have like real estate on blockchain now, and there's a couple companies that are moving into that. I can't wait to tokenize all kinds of assets. You have file storage like Filecoin or what's the other one? I got two. Storage, STORJ, etc. Stock trading, you have exchange, decentralized exchanges. So currency, that's Bitcoin or Monero. Also Dash, which is considered pretty good. Litecoin. You got infrastructure coins, right? That's like Ethereum or maybe even Cardano. They both run smart contracts. They're also called smart contract platforms. You got lending markets such as Aave, but that's not on a specific blockchain. That's a type of token, right? It specifically runs on Ethereum. Yield farming like YEarn and other ones like that. And then Uniswap, many more. Okay, blockchain by consensus. You got proof of work. That's running a math problem. You got proof of stake. Okay, they got direct I still a graph, that's a tangle. Okay, slide needs some updating there, but you get the idea. All right, the currencies are Bitcoin, Ethereum, and XRP, although Ethereum adds smart contracts. I'm not sure. A lot of people call it ultrasound money. I may have that little icon on my Twitter and other places, but I'm not sure it is. I have to think about this. People think of Bitcoin as gold and Ethereum as money. All right, so you have monetary policy. Bitcoin's only 1 million coins. Other coins such as Monero have an inflationary policy. It's suggested an inflationary policy to pay the miners. So I talked about this yesterday. I'm gonna show a little bit more of this, but these are more of the currencies. You got Monero down there, Zcash, and Dash. Okay, so let's go to our internet right here, and I want to pull up something. What was I going to pull up? Let's see if I can remember here. Inflationary policy. So we went over this yesterday. We're going to do it again. We're going to go cryptofees.info. It's open source live blockchain data. We got moneyprinter.info. And then we got L2fees.info. So they're all by the same developer. I met these guys on the internet. It's so weird that you have friends you met on the internet. People past the 2000s actually have like 2010s and laters. We have friends on the internet that we're closer to people in real life that we've never met. I've been mentoring a kid since 2015, so for 8 years, and I finally met him in person last year. It's an interesting story. I met him last summer. We'll have to talk about that some other time. Cryptofees.info. This is how much they earn in transaction fees. That's actually usage of the network. The current killer is Ethereum at $4.6 million a day, okay? And Bitcoin at a whopping 947,000. Did you hear that correctly? Yes, you did. So we'll do a 4, 6, 2, 3. Actually, that's 4,623. Let's see. It would be divided by 947. Oops, I did that backwards. Divided by, it'd be 947 divided by. So Bitcoin has roughly, is that right? 947 out of 4,623. Is that right? That should be right. 20% of the transaction fees of ETH, 20.5% of transaction fees. Think about that. So 5 times roughly Ethereum earns per day in transaction fees. So that's what they call the security budget that pays for them to perform the operations to secure the network. Okay, how does Bitcoin make up for that? By issuing 27 million in coins every day. That's correct, 27 million. That's 1.85%. Today it was 1.75 yesterday. So that means that there's 100 Bitcoin today. There'll be 101.85 tomorrow. Okay, that's the growth. Okay, now there's more than that in Bitcoin. You can look here. There's hold on, that's not what we're looking for. I usually go to CoinGecko. We're gonna do a little CoinGecko action here. CoinGecko, there we go. And we'll pull up Bitcoin real quick, and you're gonna see how many coins have already been issued. Okay, so they're circulating of roughly 19,326,718. So if you multiply that, okay, by, we're going to 28,16867, 28,168. That is its current market cap, 554 billion. Okay. All right. That's a lot. So let's see the market cap. There you go. 544,408 billion. Okay. And if we go to Ethereum now, you're going to see. And so you see the total market cap is 21 million, which means it is an inflationary coin. It is growing in value until roughly, so you got to go what's called the Bitcoin halvening schedule. We got the countdown right here. I've never been here before. Hopefully I won't get AIDS from this website. So the next halving is roughly 333 days. Okay, let's get the schedule. Each of these have a halvening. So Litecoin, Bitcoin Cash, they all, and Bitcoin Satoshi Vision. So those are all attempts to improve. So I'm going to get rid of on Bitcoin's issues, which we're not going to get into those too much. All right, let's go to the halvening schedule. This will tell us when Bitcoin no longer, when it needs to be worth a lot more. Okay, the next one's scheduled to take place March 18th, 2024. It's roughly every 4 years, and it'll drop from 6.25 Bitcoin per block to 3.125 Bitcoin. All right, so let's see what we got here. We got some graphics here. Let's pull this up. All right. It switches to, okay, at the beginning it was 50 Bitcoin every 10 minutes. So I've got buddies who probably have several hundred, maybe probably several thousand. I know it's crazy. 3 halvenings later, 6.25 Bitcoins are dispensed every 10 minutes. And then 2 halvenings after that, right? So it's 3.125, right? Divide that in half. It's 1.5, 1.6, what, 61225, I think. Let's do that. 6.25 divided by 2 divided by 2. There it is, divided by 2. So it's going to get to 1 coin divided by 2. Okay, divided by 2. Okay, 2. All right, so each one of these is 4 years. So that's the new one coming up next year. So we're going to go, so we'll just call that now. That would be 1 year. So it'd be 3. So 1 plus 4 is 8. No, 1 plus 4 is 5. Let's do the 4s first. 4, 8, 12, 16, 20, 24, 25 years. It'll be down to a quarter, 5% of a Bitcoin. Okay, I said 46 years, is that what I said? So 4, 8, 16, 20, 24, 28, 29 years. Let's look at the calendar again. Where's the calendar on it? Here we go. It's 2021. This is not a good enough calendar. Here we go. What happens when they taper off? It might become an issue. Miners need incentive to do what they do. They need to get paid. They're not running these expensive blah, blah, blah. The consequence of decline is eventually it will dwindle to nothing. Okay? So transaction fees have to go up because there will be no reason to mine. In a few decades, the reward gets so too small that transaction fee will become the main compensation for nodes. I'm sure that in 20 years, there will either be a very large transaction volume or no volume. Nakamoto wrote. That's right. That's right. Okay? It's not just me. Satoshi wrote that. All right? And I figured this out. I never even knew he wrote that. That's right, because I'm a computer guy, a math guy. And ancestors from India. We bleed this stuff. Okay? It's impossible to predict what will happen, but blah, blah, blah. Ready for the worst case. Look at this quote. It's possible to predict what will happen, but if we want a system that could last 100 years, we should be ready for the worst case. There it is. It cannot work without very expensive transaction costs. Bitcoin pays out something like $5 billion per year. See what this article is. Just want you to, the date, I'm curious as the date. October 4th, 2022. Why is it just last year? It's so interesting to me. Okay, halvening. We're going to go halvening calendar. Here we go. This is what I get. All right, so there's the next one. Come on, where's the calendar? 2024 goes 3.125. Come on. Why does it not go past that? So I expect it to dwindle to 0 in like what, after 2 halvenings. I'm going to start dumping my Bitcoin most likely. Not saying I have Bitcoin, not saying I don't. I mean, I have some. Just like I have Ethereum, you know. The trick is, for me, I have long-term holdings, I have day trading, and then I have my stack. My stack, naturally, I keep most in dollars right now. There's really no asset out there that, like the majority of billionaires, I ain't no billionaire. I ain't even close. I ain't even, yeah. I don't have like a blip. But, there's, yeah, they keep their money in dollars. So me and my boy were talking about it yesterday. So these are block times. Come on, where's it? Here we go. Come on, these calendars are terrible. It's actually stock to flow chart, which we'll talk about some other time. This actually looks like a pretty decent website. I'll check that out later. There we go. Finally, man, I'm slow these days. There we go. Forecast. So right around 2040, that's when I said it switches to. I said 26 years. Wow, my math was right. Okay, shocker. All right. So 2040. There it is. So pretty much somewhere like 3 halvenings after the next one. Yeah. Well, I got that right. 26 years after next year. Yep. So that's pretty much when the emission rate goes to 5% of a Bitcoin. Now, assuming the Bitcoin is worth what's that going to be worth? It should be worth quite a bit. I don't know. This is crystal ball level. Could all be gone. What did Satoshi say in that last article? It'll either be, the transaction fees will be cost prohibitive, or there will be no Bitcoin at all. Right? All right, that's that. So that's all I was trying to tell you people. Tell everybody. Excuse me, I said you people. I don't offend you. Oh man, Bitcoin's going down right now. Ow, it's gone up a little. Come on. Don't pull that on me. There we go. All right, so that's that. We've been on for quite a while here, and there's some things I wanted to do. I'm actually going to do another. This is Transaction Street. I'm actually going to stop here on part 4. We're going to call part 4 basically the beginning of the introduction of tokens and smart contracts, right, and cryptocurrency, right, and different types of tokens. In the next talk, I'm going to talk about basically Ethereum. I'm going to run some transactions for you, and I'm going to talk about layer 2. All right. I love you all. God bless. Stay frosty.